Ladies and gentlemen, Rex Bear League Project, how the heck are you? Colin Plume's with us today, and I sure am glad he's on the podcast. So, pretty much hot off the press, did you know that Spain and Portugal and parts of France have been without power for several hours? Imagine what happens if it gets a little bit closer to home here in the US. I mean, we had that show Zero Day, that series Zero. Did you see that series Zero Day?
De Niro, right? With Robert
Yeah.
De Niro. I haven't. It's on my to watch list. I haven't seen it, but I've heard good things about it.
You need to watch it before the power goes out.
Okay.
Yeah, it's intense. And it just seems like it's amazing how prophetic some of these shows are. They'll come out weeks or months before certain events take place. And, maybe life mimics art or whatever, but definitely a lot of concern about the power and the power supply. And not only that, but the markets are crazy right now. I mean, I've got family and friends that are contacting me that are just super down to earth. And very rarely do they get nervous or concerned, but they're very concerned about their retirement, about the Social Security, about their money in the bank. And the tariffs have just, increased that fear. So, I want to know what you think about all of this. I was just going through a list of 15 different red flags that were already in a recession and possibly a depression on the horizon. What do you think about that?
Well, and confidence is the key to a strong economy also. In a consumer-based economy where, the continuing of buying goods keeps the economy going. And I think that consumer sentiment is low. They're saying that consumer expectations about their personal finances have plunged to the lowest level ever recorded. So I think with the rising credit card debt, with rising government debt, people are starting to feel the pinch. And then with, Liberation Day and the tariffs pulling back the stock market, I think it's just overall, you're just seeing a lot of negative sentiment out there. And I also think we're changing the way that we do business as a government, right? With Doge and with some of the things that we're doing now that are unique. I think we're in a position where we're shifting how we hire. We're shifting how, people are losing government jobs that they've had for many years. So there's a lot. It's like, who moved my cheese, right? A lot is changing, and change is tough. People don't like change. And so I think that's adding to the negative sentiment that's out there. And people are concerned about, what's going to happen for the rest of this year and the future. They're concerned about their jobs. So yeah, I think overall, you're right. I'm hearing it too, is that there's definitely been a shift in just confidence. But I think it's really not anything to do with the current administration. More, I think it's a lot of what's happened before, and now it's, sort of getting dropped in the lap of President Trump. Because if you look at a lot of the debt and a lot of the things that he's trying to clean up, these are things that have happened from, Biden and long before that. Trying to dig our way out of this hole is not an easy task. So I think that I think the consumer sentiment is actually wrong. I think that people should be a little bit more confident because we are making some fundamental changes. But that being said, right now in the moment, people are quite concerned.
Should people be concerned about their the U.S. dollars, like their money in the bank?
The dollar is dropping. The dollar is the lowest it's been in about 5 years relative to other fiat currencies. I think that a lot of that has to do with the fact of what the world is doing. The world is concerned about our spending. The world's concerned about our state of our economy. And obviously, the tariffs are a shake and a change. And so a lot of investor confidence has to do with them having a clear trajectory of what's going to happen over the next 3, 6, 9, 12 months. And I would say it's sort of hard to know what's going to happen over that time period. most of the tariffs, most of the countries have come to the table with the U.S. and negotiated some kind of reciprocal tariff, except for China is the one large, holdout, and that's affecting people on the ground. I know a number of import export people that are entrepreneurs that basically they're not shipping anything from China because there's absolutely no way you can make any of that math if they're shipping. I know this one guy ships and he sells things at like Dollar Tree and those kind of stores. And you're basically looking at over 200% tariff on all those goods that would come from China. There's no way you can pass that savings on to the dollar store. They're just not going to pay it. And so they're shifting their mindset and starting to buy goods from other places, or they're changing things that are on the shelf, or they're going to start looking in different ways to fulfill the things that they would normally get from China. So a lot of the things that he was doing is he's shifting to Indonesia and different places in the world because their tariffs are much lower. So you're going to see that, and that transition period is going to take some time. The hope is that they negotiate a deal, Trump and the president of China negotiate a deal in the next month or two that everybody feels good about, and then we can continue shipping here in the U.S. because at the end of the day, as much as we want to move things here and we're concerned about supply chain, we're not in a position right now where we can make all the goods that we need here in the U.S. So how do we fulfill that gap until we're able to manufacture more items here? And the question, like a big question I had people talking about, like, can we make iPhones here? In theory, yes. What is it going to cost us if we move some of these more expensive items here? What's the labor going to cost us? Is the iPhone going to go from $1,000 to $3,000 for us to make it here in the U.S.? These are all the questions that we don't know. Ultimately, I think big picture, we do want to make more things here, and it will help us do that. But at what cost? And I think that's why consumers are afraid, because they don't know how much their dollar is going to be able to stretch to cover the increased costs and a lot of the goods based on the tariffs that we're seeing that are coming from the president.
And what kind of effect is that having on small businesses?
Yeah, it's difficult. Yeah, it makes it quite difficult for small businesses to know. Now, I will say on the positive, one like silver lining in the data is the malls are back. Retail malls are on fire. The one shining light in real estate right now is people are actually, interestingly enough, going back to the malls. And if you look at Westfield and you look at a lot of these retail operations, people are wanting to get out of their house and do some of the shopping. As much as Amazon and all this stuff has taken over, there is a segment of people that still want to get out. And I was talking to someone recently about, I don't have a teenager, but we have young kids, and he was saying that that's like one of the places that they feel comfortable to drop their kids off is at the mall. And so the good news is that there is a little bit of people starting to come out of the shell, come out of their house a little bit. They're starting to go to stores. That's going to help us drive things in this economy. If people are really willing to do that, the Amazon economy that we've created, it really gives a lot of the economy and wealth to countries overseas and also to one company. And I'm hoping that this trend sort of continues, because getting people out to shop in person is one of the best things that can help us drive this economy. So that is one of the silver linings that are happening out there in the real estate market. A lot of the other areas, the multifamily apartment market is falling apart. Delinquencies are on an all-time high. So you're seeing areas that are really struggling, and then there's some silver lining in the retail side, which is exciting. So I think there's some pros and cons to that. Multifamily, is interesting that it's struggling because they say that there's not enough homes in the U.S. or they need to build more, yet apartment owners are struggling. And that's really a function of the fact that interest rates have gone up so dramatically, with when a lot of these apartment owners bought them. So they're struggling with that refinance at that much higher rate. So that's going to be interesting to see how that falls out over this year. But ultimately, I think that there's going to be some opportunities in the markets. There's some opportunities in real estate. And I've been talking a lot about the opportunity in silver, because I do think silver, another tangible investment that's been obviously overshadowed by gold, and gold's been on a historic run. But silver's only up 12% this year, even though 12% is great relative to gold. It hasn't moved as much. But there's a lot of compelling evidence that silver is potentially on the rise, and we could see. I've really been calling for $40 silver, which I think is the next number it's going to hit, which would be a pretty significant gain from where it is today, sitting about $33 and some change.
Well, you were spot on your gold predictions.
Yeah, no, gold. Yeah, gold was. Gold made sense. Gold continues to make sense. J.P. Morgan, Chase, Goldman Sachs, right now are all predicting $4,000 gold spot price. We're sitting at 33.48, 33.49 today. So they're predicting early 2026 that we hit 4,000. And I think that we've been talking about gold for 8 years, Rex. And, the thing that's been happening with gold is gold has now taken the title of the ultimate hedge investment. That's what central banks are saying. That's what institutions are saying. That's what I had a conversation over the weekend with a guy that runs a hedge fund, and he's a gold bug, a hedge fund person, because people don't realize is that hedge funds, really a lot of times most hedge funds are set up to protect large endowments and institutions against downside. So in markets like this, when the equity market's down, the S&P, they're all down, gold has been a real a winner. It's up 15% this year. It's up 47% over the last 14 months. So hedge funds are buying gold. I mean, this is like a new thing that people aren't aware of, but they've been buying gold for 2 years. They love the gold price. They continue to love the gold price. And he was telling me all the reasons that they love gold. And, they are really looking at a way, when people buy their hedge fund, they're really looking at it as a way to protect themselves against the downside. And what the conversation with this hedge fund manager or the owner really told me and really made sense is that when you're an investor or an institution, you're looking to do the same thing, is that you want to have the pie, but you want to have parts of the pie. You want a big chunk that when there's a lot of uncertainty, that you have protection. And so when things are, bullish, you can ride the typical, risk adverse investment, riskier investments like equities. But when it's scary time, like right now, when consumer sentiment's down and people are uneasy, that's when you want to have these kind of hedges. And, he was saying like gold is the real ultimate hedge right now, because it is so uncertain with the tariffs. It's so uncertain with what's happening with trade. A lot of countries are boycotting us right now. So there's this overall, concern. And so that's when you really have to have that ultimate hedge to protect your portfolio. So whether you're a central bank or an institution or just a day-to-day investor, you're all looking to do the same thing, is protect that downside risk. And that's what he was explaining to me. And this is a hedge fund that has, billions of dollars invested, that they're actually more worried about the downside than the upside. And that's really their focus.
I mean, has that happened in the past before, where hedge funds have been that hot with gold for 2 years? I mean,
in the 16 years that I've been doing this, I think it's been interesting. I think I got in 2007, 2008. And so they were, gold was already starting to take off. It had its big run from 2001. 2008, 2009 was a very similar time in that we had a lot of uncertainty. We had a housing bubble that was bursting, right? We had a credit issue. I mean, everybody remembers 2008 and the movie The Big Short, where we had, basically all these people that owned homes that had not enough money to afford the homes. The banks were just rubber stamping, loans left, right, and center. So it was kind of a similar time. We were bloated as an economy. And I think we're in a similar time. I think that real estate market's struggling, but I also think the equity market's primed for a sell-off. I mean, you looked at the Magnificent Seven over the last 2 to 3 years, it was really pushing the economy up. It was really unique that you had these seven companies, these Magnificent Seven tech companies, really driving things. And now people are concerned. They see the multiples that these companies were trading at relative to what they actually are worth. And for years, people just kind of went along with it and it made sense. But I think now people are really concerned that these companies are inflated, that they're worried about a correction. And so that's why we're seeing a lot of the sell-offs and a lot of concerns. So I think this is going to be a year where people are really going to move into different assets. They're going to protect themselves. The hedge funds are doing it. The central banks are doing it. I think this is going to be a real, 12 to 18 months of concern to make sure that everybody's protected. And I think right now people are just worried about a big market crash coupled with a recession. If those two things happen, I think we could see some pretty dramatic pullbacks. And so I think what investors are doing right now is saying, like, I don't want to be around. I don't want to wait around to see that. I'm going to get into something safe. They're getting into gold, and you've seen gold to silver ratio. It's 104 to 1 right now. So you have all these numbers, getting thrown out there. But that's what I was saying. Gold is obviously always a great investment, but I do think silver at this 104 to 1 gold to silver ratio is quite unique. The average over the last 100 years is 65 to 1. So even if gold didn't go up $1, if we get to 65 to 1, that means silver's trading at 170, $180. So I think there's a lot of room for silver to move.
The Magnificent Seven and their rise to glory, I guess you could say, is there a potential for some type of like 2000 .com crash again, like the .com bubble that blew up back in the early 2000s?
Yeah, I mean, I think at the end of the day, everything is riding in tech on AI, and we are seeing some of the good effects of it, and we're seeing some of the ideas have not come to fruition. And so, when you have a company, come out, we had this deep seek company come out 2 months ago and basically say that they could do a lot of the AI, chat GBT for a fraction of the price. It sends shockwaves through the market. And you saw it, NVIDIA and all these companies pull back pretty dramatically. They have these one day corrections. So everything is betting on the AI that it's gonna make some significant changes, and it will make significant changes, but they're making some really bold promises too. And so that's the big question mark, is that they're all betting on it, and what will the effect be? How much will it increase production? How much will it make businesses more efficient? These are all the things that until we see it happen, we don't know. So I think if we continue to see just R&D and money spent there and you don't see the return, eventually people are going to look at these companies and go, they're overvalued and overpriced if they can't solve a lot of the problems that we think that they can. So it's just a waiting game this year, but I think I would be concerned about having too much money in that tech sector, those Magnificent Seven. I think there's a lot of room. And we saw with Tesla, obviously had a dramatic pullback. It was trading at, really close to all-time highs. Now we've had it really kind of move back, and there's been a lot of sell-offs. So I think some of these companies are struggling to hit these unbelievable returns and demands that they need to justify these prices.
So I saw Sam Altman in a news clip the other day, and then I was reading what he allegedly said about how they're going to get AGI, but it's going to take like $100 billion or some ridiculous number.
Right.
And it's almost as if, well, we can't say for sure, but the money's there, then we'll be able to get it. It's like, and
Sure.
That seems really shady to me that they're making that claim. But also, I read about a company that's got tens of billions of dollars invested into it and claims of reaching AGI, and it hasn't reached that milestone yet.
Yeah.
That blew me away. That's insane.
Yeah, it's a lot of money invested, and that's the real question, is that will these things, come to fruition? I remember, a few years back, everybody was talking about, the virtual worlds that everyone's going to be living in, and you had all this technology go in the glasses, and people were going to be living these worlds, and some people are there, but the effect that they said it was going to have was much more than what it is today, right? I don't see a lot of people that are only living in that, alternate universe that they were proclaiming, Meta and all these companies were proclaiming a few years ago. And then I think overall, and this is something I'll sort of tease, Rex. I think you and I are going to dive into this a little bit more next week on a live stream. Is I think the world economy is sort of hit this tipping point where we've hit a point where we've produced a lot. We've had this unbelievable growth. As a world, can we sustain this? Can we continue to sustain the amount of growth that we've seen? We've seen it, and we started this show talking about how Spain and these other European countries have no power. I mean, you're seeing these are becoming more routine, where we've grown, obviously grown population, we've grown growth, we've grown consumption. And I think this is something that we'll get into, is like, have we hit the tipping point? Are we not going to be able to sustain this many people with the energy that we have? Are we going to be able to continue this industrial output? Will we be able to make food quick enough? And like all these, and we're living on, technology. We need electricity. We need everything to survive. I mean, this is how everybody lives. We're not hunter gatherers anymore. So if we don't have these things that we're used to, can we survive? These are the questions that I think we'll dive into a little bit more. But I do think we've hit sort of a tipping point in terms of consumption and energy and usage, and where do we go from here?
Well, so and doing a quick search, because there's been several events that have taken place the past 12 months. Significant power outages that include much of the nation or the nation. We've got India, South Africa, Pakistan, Sri Lanka, Lebanon, Papua New Guinea, Yemen, then recently Chile and Cuba have experienced major blackouts. And plus what we were just talking about a moment ago in parts of France, Spain, Portugal's capital. Whether or not it's espionage or just there's not enough power to go around, it's pretty amazing. It's pretty fascinating, and it's always good to be prepared, not scared. So, like, I'm not attempting to push fear into people's minds, but folks, like this is a pretty big deal. And with the digital web that we all seem to be connected to, something like gold and silver and tangible assets can be quite a benefit. Like, I've got junk silver, which is basically silver quarters and silver dimes, where if heaven forbid you ever had to have some type of form of exchange, or if I ever have to do something like that, I don't know how much your credit card or your debit card is going to be worth if you can't use it at an electric store. But it's just nice to have some of that just in case. And if it does happen, it'll most likely only happen for a short amount of time. It's not like it's going to be for weeks or months or years, but just to know that you've got that is, food, water, water filtration. Don't go crazy, but just, have something to protect your family for a week or two, or a month, or as much as you can, even if you're in an apartment. But this is something that I noticed, and you've probably noticed this also. We go back to 2000, we had the dot-com bubble. Well, then what happens in September 2001? And then the market tanks again. And I think they even froze the stock market for a couple of days because of the fear of, what's going to happen next. But what we're dealing with right now in Iran and the Middle East and these tariff wars with China, it seems like we're at the cusp of something possibly where we could go to war with Iran.
And they did shut down the stock market for a few days after 9/11. And you see these situations where the government does take some kind of control. And so, I mean, obviously we saw it during COVID. It affected a lot of people, and I still think we're feeling the effects of all the small businesses that went out of business and all the debt that we put out there. I think we put out way too much debt during that time period. So you do see these things having an effect on our economy later. But I do think you're mentioning don't go crazy, but I think the one thing that is in my mind is a little crazy, I think not having anything to protect yourself during all of these things that we've already seen happen. Like the idea of having gold and silver is, where some people are going to have food, some people are going to have water, some people are going to have guns. I mean, these are, in my opinion, necessities now. They're not even a question mark. I think we've proven that you want some protection. You want to have something that is out of the government's hands. And so having some gold and silver makes a lot of sense. It's just another way to survive in the economy because we don't really know what's going to happen. We're just, we have this blind faith that, the government's going to do this or all these entities are going to do the right thing. But we've seen that they in a lot of situations, they haven't done the right thing. So I think having that level of control at your fingertips, having some assets that have obviously gone up tremendously in value. And so I think this is a reaction. The price of gold is a reaction that the dollar is not strong, that people don't trust our government, that things are concerning, consumer sentiment is down. This is all a reaction to that. And so, the price doesn't go up like this unless unless people believe that these things are valuable, right? And so I think it's important today more than ever to get educated about what we do, get some physical metals. And you and I have been doing this for a long time. And I think you always tiptoe into these conversations, but at the end of the day, like getting people into gold and silver over the last 8 years, you and I having these conversations has proven to help them. They have made profit. They've done well by doing it. And I don't think there's any evidence that that's not going to continue in the future. So I think it's a great time to get educated. I think it's a great time to learn from us what we do. We don't do any ETFs. We don't do stocks. Like you're getting the real item. You're getting the item that central banks are buying. You're getting the item that banks are buying. Large institutions, hedge funds are buying. I mean, I think when I tell people that hedge funds are buying gold, their mind is kind of blown away by that because people always think hedge funds are getting into these very risky and high levered investments, but they need protection too. So I think it's a great time for us to talk about it, for people to call us, learn about what we do. Obviously, past performance is not indicative of future results. You have to do your own education, but I think it is a good time to get educated about precious metals because listen, the proof is in what we've seen over the last few years, and big money is looking for asset preservation, and they're looking for the ultimate hedge, which I think is cool.
I like the saying, follow the MFers, the money funders.
Yeah.
Absolutely. And just to throw this out there, this is a pretty cool stat, folks. I don't know if you knew this or not, but historic performance trajectory, gold prices at nearly 3,300, and it's actually up a little bit since then, but that is 1,180% gain since 1999. So speaking of the 2000.com burst, you go back to 1999 and you look at gold today, and we're at 1,180% gain. That's what I'm talking about. Hello.
That's pretty good. That is not bad. And I will say, as much as I've had people, well, maybe it's too expensive or this or that. If central banks are buying at this price, if hedge funds are buying at this price, they're looking at all the same stats you are. Being expensive is, you have to look at inflation. You have to look what things cost today and realize that gold's going to go up the same way. Silver is going to go up the same way. So it may seem like that, but I've been having this conversation with people for 16 years that it's been expensive, and yet it always continues to go up. So that being said, Rex, as always, it's great to be on your show. A lot of fun. I hope people were able to take a little out of this. And please give us a call, talk to a US-based person, all ages, people that really love physical metals. We'll give you all the information you need. We'll educate you. If this is something of interest, give us a call. We'd love to give you more information about it.
Yeah, thank you very much. And is there, if somebody does decide to convert their 401 or IRA through Noble Gold Investments, do you guys have any opportunities right now for them?
Yeah, we have some free coins. I think we have the 1/10 ounce gold American Eagle for any qualified IRA. We also have, we only have two left. We have two shipwreck coins from the 1855 shipwreck, the ship of gold. We had four, we only have two left. So if you want a coin that, a gold coin that was sitting in the bottom of the ocean until the early 2000s that they pulled out, we have those coins available. And then obviously a lot of other gold and silver products that are available that we can get to. But everything is bullion, you know, besides this shipwreck coin, which is a rare coin. Everything is, we really focus on getting the most weight, the most bang for your buck, the most value for your dollar. We can do IRAs, old 401ks, or just direct investments. But anything under the sun we can help you out with, just, you know, give us a call, mention that you saw us on the League Project and Rex's show, and we'd love to help you.
Oh, fantastic. Well, I'm looking forward to our live. And folks, we're going to be doing a live podcast next week. So if you want to join in on that and ask some questions during the live stream, stay tuned. And thank you, everybody, for being excellent to each other. Keep being the change you want to see. And Colin, have a beautiful day. Thank you.
Thanks, Rex.